It's kind of crazy, right? Like everywhere you look these days, AI is blowing up. But the thing that's really caught my eye is how fast it's changing the world of finance, especially like the high stakes world of hedge funds and asset management.
Yeah, no, you're right. It
It
is.
really makes you think beyond all the hype, how are hedge funds and asset managers actually using AI right now? And what does that mean for, our investments down the road?
Well, I think that's the million-dollar question, and
Hmm.
it's definitely one that's on the minds of everyone in the industry,
Hmm.
from trading floors to boardrooms, really. I mean, we're watching AI go from, this futuristic concept to a very real and honestly a pretty essential force driving financial decisions.
Totally. And to really get into it, for this deep dive, we've pulled together a bunch of interesting sources, recent surveys, really cool real world examples from some of the biggest players, and insights from experts who are trying to figure out where all this is going. Basically, what we want to do today is cut through all the hype around AI and give you a clear and realistic understanding of how it's changing things, what's actually happening right now, and what we can reasonably expect in the next few years.
Right.
We're talking about AI's role in everything, from super fast trading to analyzing tons of news articles and everything in between. It's pretty wild how widespread its influence already is.
It is. And to really understand just how much of a shift this is, just consider this stat from a 2024 Mercer survey. It found that 91%, that's right, 91% of asset managers are already either using AI or actively planning to. It's not just a niche thing anymore. This is a fundamental change in how investment decisions are being made and put into action.
91%. Wow. Okay, so it's not just like the classic quant funds, the super math heavy firms that are playing around with AI. You're saying that even asset managers that are more, fundamentally driven, those who rely on deep research, are starting to use this tech too.
Exactly. AI's use is going way beyond just crunching numbers. Even firms that traditionally focused on qualitative analysis, like really in-depth research, they're now using AI to boost their processes. AI is helping them find hidden patterns and insights in huge data sets that humans might miss. Like, think of it as giving those analysts a super powerful data-driven assistant.
Oh, that makes a lot of sense. So where exactly are firms using AI right now? What are the key areas? You talk about quantitative trading and this idea of alpha generation. What does that actually look like when AI gets involved?
Okay, well, at the core of it is using machine learning models. These models can be anything from basic stats to really complex deep learning networks. And the goal is for them to spot these little market anomalies, these patterns and signals that humans might not even see.
Hmm. Okay. But can you give us a real example? Like, who's been doing this for a while and what kind of results are they seeing?
Sure, a great example is Renaissance Technologies. They're often just called RenTech.
Hmm.
They've been at the forefront of using AI in finance for decades. And their Medallion Fund, that's kind of legendary in the industry. What's really interesting about them is how much they rely on machine learning to predict very short-term price moves. Like, we're talking holding periods as short as 1 or 2 weeks.
Wow. Really that short term? So they're not looking at a company's long-term value or anything. It's all about these tiny price changes.
Exactly. And maybe the most incredible part is their trades are all fully automated. No humans involved at all.
Hmm.
The founder, Jim Simons, has said that this approach, this algorithmic emotionless trading, has been a major factor in their crazy annual returns. Like, they've averaged around 44% per year for decades. That level of consistent outperformance, it's really unheard of. And it shows how powerful their algorithmic approach is. I mean, it's probably not just the models themselves, it's also the data they have and the infrastructure they've built.
44%. That's insane. So Rentech really exemplifies this idea of letting AI run the show completely. But is that like the norm now, or are most firms still kind of hesitant to give AI that much control?
Well, while RenTech is definitely on the extreme end, there are lots of other funds that use AI prediction models to forecast a bunch of things: prices, volatility, even macroeconomic trends. And they use those insights for both high-frequency trading and more systematic strategies.
Okay, that's the number crunching side. But AI is also getting really good at language, right? And that's where NLP, or natural language processing, comes in. How is that changing the game for asset managers?
Yeah, so NLP, and especially the rise of LLMs, those large language models, they're letting firms get insights from a whole bunch of data that used to be unstructured, like text, audio, even images. Just think about how much stuff is out there: news, social media, earnings calls, analyst reports. Like, it's a fire hose of information.
It's mind-boggling. There's no way a human could ever keep up with all of that.
Exactly. And now AI can analyze all that stuff in almost real time. It can figure out market sentiment, find new trends, things that wouldn't be obvious from numbers alone.
Got it. So, do you have an example of a firm that's doing something really innovative with NLP?
Absolutely. BlackRock's systematic active equity team, they have a really cool approach. They're not just doing simple keyword searches. They're using these sophisticated LLMs to actually read and understand earnings call transcripts and news articles. They're looking for subtle signals in the language, not just if words are positive or negative, but what's the meaning behind the words.
That's way more advanced than just counting positive and negative words. Understanding the why behind the sentiment seems like a big deal.
Huge. And BlackRock took it even further. They built their own LLM specifically to predict stock market reactions to earnings calls. They trained it on something like 400,000 transcripts. And you know what? It actually beat general-purpose models like GPT-4 at predicting stock prices after those calls.
Wow, that's amazing. It really shows how powerful it can be to train AI models specifically on financial data. So it's not just about finding winning stocks, right? Where else is NLP proving to be useful?
Well, people are starting to use it for macro forecasting, like analyzing central bank statements, the language they use to try and figure out their next moves. NLP is also becoming crucial for ESG analysis, environmental, social, and governance. AI can now scan tons of reports and news to assess a company's sustainability and find potential risks that you wouldn't see in their financials.
Interesting. So it's about more than just finding good investments. It's about understanding the bigger picture, the economic and even ethical context of those investments. Now, what about managing risk? How is AI being used to keep portfolios safe?
AI risk models are getting really good at spotting complex risks that traditional models might miss. They can analyze way more market scenarios and the connections between different assets.
Okay. And who's leading the way in applying AI to risk management?
Again, BlackRock is a major player here. Their Aladdin platform manages trillions of dollars, and AI is at the heart of its risk management and portfolio optimization tools. By running tons of market simulations, Aladdin helps portfolio managers spot potential problems and make smarter decisions about rebalancing their portfolios to reduce risk.
So it's kind of like an early warning system for your portfolio.
That's a good way to put it. And beyond that, AI is being used to spot anomalies, weird trading patterns or data points that might point to fraud or errors. There's even research on using deep reinforcement learning, which is basically AI learning from trial and error to dynamically adjust portfolios in real time, all with the goal of maximizing returns while minimizing risk.
Portfolios that adjust themselves based on AI. That sounds pretty futuristic. Is that a common thing now?
Not quite yet. Most firms, I think it's over 50%, according to surveys, they use AI for analysis and insights, but human managers still make the final calls. That's the human-in-the-loop approach. But the good chunk, something like 20%, they let AI models suggest trades, and then humans review and approve or reject them.
So there's a range of how AI is being used. What about the day-to-day tasks, the more behind-the-scenes stuff? Can AI help with any of that?
Definitely. We're seeing more hedge funds using generative AI tools, things like ChatGPT. A survey in late 2023 found that a whopping 86% of hedge fund managers let their teams use these tools.
86%. I'm actually surprised it's that high. What are they using them for?
Oh, all sorts of things. Coding, writing drafts of research reports, brainstorming new investment ideas. It can help with marketing stuff, summarizing long reports, even writing basic code for trading algorithms, all of which can save a ton of time and boost productivity.
It's like having a super smart and tireless assistant. But are there any downsides or things to watch out for with all this Gen AI?
Oh, of course. Data security is a big one, making sure sensitive information is protected. Then there's the problem of AI hallucinations. When it generates stuff that sounds plausible but is actually wrong. And making sure the quality of AI-generated content is consistent requires careful oversight.
So human oversight and validation are still really important. How about the less glamorous operational tasks?
Oh yeah, AI is getting used there too. Automating data cleaning, reconciling accounts, regulatory reporting, all those time-consuming processes. This frees up people to work on more strategic things.
So if we zoom out and look at the big picture, it seems like AI isn't just some theoretical thing anymore. It's really integrated into how hedge funds and asset managers operate around the world. It's not just the quant firms anymore either, and it's seen as a must-have tool for staying ahead of the competition. But for now, most firms still have humans involved in decisions, and making sure the data is good and secure is a major challenge.
I think that's a pretty accurate summary. The feeling in the industry is that AI is a powerful way to combine human expertise with advanced data analysis, ultimately with the goal of getting better returns.
All right, let's move from the big picture to some specific examples. Seeing how this tech is being used in the real world makes it way more interesting. Let's go back to some of those firms you mentioned, BlackRock, Citadel, Bridgewater, and dive deeper into what they're actually doing. First up, BlackRock. We talked about Aladdin, but how else are they using AI?
So beyond Aladdin's risk management capabilities, BlackRock is using AI a lot in their active investment strategies. Like we talked about with NLP, they're using LLMs to analyze huge amounts of text, like news and earnings calls, to find potential investment signals.
Interesting. Like, are they trying to pick up on the overall market sentiment, spot new trends before everyone else does?
That's the idea. They want to see the bigger picture, what people are talking about, how they're feeling. For example, they can use AI to analyze the tone and sentiment of what company management says during earnings calls. Or, like, they can track how often crucial themes, things like AI or inflation, pop up in news and reports.
So they're not just looking at individual companies, they're trying to understand the whole market conversation, right?
Exactly. And they actually gave an example of how this works. They said they use an LLM tool to help a portfolio manager find companies that were early adopters of a new trend in the pharmaceutical industry. The AI sifted through thousands of documents, like earnings calls and news articles, to find these hidden gems. And BlackRock's AI lab is also really into using generative AI for prediction. They found that AI models trained specifically on financial data can be even better at predicting market reactions than more general AI models.
That makes a lot of sense. They're really invested in this idea of using massive data, advanced AI, and human expertise all together.
Yeah, and their track record shows it.
Now, what about a firm like Citadel? They're known for pushing the limits of technology and finance. What are they doing with AI?
Oh, Citadel is definitely at the forefront of this. They have amazing tech infrastructure, both for their investment management and their market-making businesses. Some people say they've been using machine learning in their trading for almost 20 years.
20 years, that's a long time in the world of tech. What kind of stuff are they doing specifically?
Well, they're developing these really advanced models to predict price movements across all kinds of assets, stocks, bonds, commodities, the whole range. They use a lot of different machine learning techniques, and they tailor them to each specific market. Their CEO, Ken Griffin, he said that he believes AI is a huge deal for boosting productivity and helping make decisions. But he's also said he doesn't think AI will completely replace human stock pickers anytime soon, at least not for making big long-term bets.
That's interesting. Even in a super tech-driven firm like Citadel, there's still this belief in the value of human judgment.
Exactly. They seem to be focused on using AI to make their human portfolio managers better. Like they're using machine learning to analyze tons of what's called alternative data. This is data that's not your typical financial stuff.
Right.
Things like satellite images of parking lots to see how busy stores are, or credit card data to track spending patterns. They even use reinforcement learning to optimize their trading execution, making sure they get the best prices when they buy or sell. And, just like BlackRock, they use AI in their risk management systems to run simulations and find potential problems. Plus, they're investing heavily in top data scientists and AI researchers, which shows how committed they are to this.
It's almost like an AI arms race.
Kinda.
Okay, how about Bridgewater Associates? They've been pretty public about their move into AI-driven investing. What have they been up to?
Yeah, they made a big splash. In 2023, they launched a new fund with like $2 billion in it. It's all about using machine learning to make investment decisions.
That's a serious commitment to AI. Tell us more about it.
So Greg Jensen, one of their co-CIOs, he created an Artificial Investment Associate Lab, or AIA Lab. It's a team of investment pros and machine learning experts, and their goal is to basically copy Bridgewater's whole investment process using AI. The fund they launched uses a bunch of machine learning models to forecast big macroeconomic trends like global economic shifts, and then it allocates money based on those forecasts.
So it's trying to figure out where the global economy is going and then position itself to profit from those changes.
Exactly. And they've already had some wins. Their AI models predicted some big moves in the euro exchange rate and also anticipated inflation. But they also have safety nets in place. The AIA lab is overseen by human risk managers, and Jensen himself has a kill switch to override the AI if necessary.
A kill switch, yeah, that probably makes investors feel a bit better. Anything else notable about Bridgewater's AI work?
They're also working on using natural language models to help the AI understand news and come up with strategies, almost like it's having a conversation with the human team. This combination of analyzing huge amounts of data and understanding the nuances of language, that's cutting-edge stuff. They see this as a potential game changer, something that could create whole new sources of returns that aren't tied to the usual market ups and downs. Even a giant like Bridgewater is seriously exploring autonomous AI investing, but always with some human oversight.
Yeah, sounds like a big step toward the future of investing. Now, we can't talk about AI in finance without mentioning Renaissance Technologies again. They've been doing this for so long. What can we learn from their success?
Rentech, they're like the gold standard,
Yeah.
right? Especially their medallion fund, which is almost entirely run by algorithms. Jim Simons has always been clear. Their trading decisions are made by machine learning, no human intuition involved, period.
Wow, so it's like they're saying the algorithms know best, hands off.
Yeah, pretty much. They have these super advanced models that look for tiny price inefficiencies. They analyze decades of market data to find patterns and arbitrage opportunities that others miss. Their basic strategy is doing a ton of small trades, each with a slight edge, holding them for a short time, like days or even hours. They also use sophisticated techniques to figure out how much to bet on each trade, so they maximize their gains while minimizing risk.
And I imagine these models are constantly learning and adapting, right?
Oh, definitely. They're always retraining themselves on new data to keep up with changes in the market. And their returns speak for themselves, averaging something like 44% per year for decades. That's insane. They're super secretive about how they do it, but their success has inspired tons of other firms.
Hmm.
A lot of the newer quant funds are basically trying to copy Rentech's model. They're combining huge data sets, scientific methods, and sophisticated algorithms, and letting the algorithms run the show.
So Rentech is like the poster child for AI as the primary decision maker in investing. Now, you also mentioned some newer, more innovative players in the AI space. Who should we be watching?
There's a lot of cool stuff happening outside the big names, too. Numerite, they're doing something really unique. They crowdsource their investment predictions.
Yeah.
So they had this weekly contest where data scientists from all over the world build models using encrypted financial data. The Numerite's own AI combines the best models to make the fund's actual trades.
So it's like a global team of AIs making the investment calls? That's a wild idea.
It is. They basically have an AI making all their trades based on the collective intelligence of thousands of models. And they reward the data scientists whose models perform the best. World Quant is another interesting one. They have a huge research team that focuses on developing AI-driven trading signals for all sorts of markets. And they have a platform where these signals are constantly being generated, tested, and refined. The best ones then make their way into the actual portfolios. And then you have smaller firms like AI Capital Management or AICM. They're a proprietary trading shop that's experimenting with really advanced tech like deep reinforcement learning and even computer vision to find trading opportunities. They're a small firm, but they're all about fully systematic, emotionless trading using high-performance computers. I think a lot of quant traders see that as the future.
Wow, so many different approaches. Some firms are using AI as a helper, others are going all in on algorithmic decision making. But the common theme seems to be that the firms that are really good at using AI are the ones setting the new performance standards. And with all the investment in AI talent and infrastructure, it does feel like a race to the top.
It definitely is. Being able to find and keep top AI talent and to build and maintain the right infrastructure, that's becoming a key advantage in finance today.
Okay, let's talk about how this AI revolution is playing out in different parts of the world. You mentioned some stats on regional adoption. North America seems to be a bit ahead, but what are the main differences you're seeing?
So in 2023, the Stanford AI Index found that about 61% of financial firms in North America were using AI. Europe was close behind at 57%, and Asia Pacific, excluding China, was at 58%. China was a bit lower at 48%. But like you said, those numbers don't tell the whole story. North America, especially the US, has the most hedge funds and the most tech talent. Big players like Citadel, Bridgewater, and Rentech, they've been early adopters of AI, and that's been helped by a strong network of data providers and a general culture of innovation. A lot of firms in North America see AI as a game changer, something that's fundamentally changing how they innovate. And being close to big tech companies and lots of AI startups gives them a boost too. Canada is exploring AI in finance, but it's on a smaller scale. The U.S. has lots of capital and pretty flexible regulations, which has allowed for lots of experimentation. But the SEC, the main U.S. regulator, is starting to pay more attention, which could change things.
It sounds like North America is all about speed and pushing the limits, but regulations might slow things down a bit. What about Europe? Their adoption rate seemed pretty similar.
Yeah, Europe was at 57%. They have some big quant firms, like Man Group's AHL and Witten, mostly in the UK, that have been using machine learning for a while. And European banks and insurers are starting to use AI more, especially for risk management and portfolio optimization. But Europe does seem to be lagging a bit in some of the newest AI areas like generative AI. One survey found they were about 30–40% behind the US in 2023.
What's causing that gap?
A few things, probably. Europe's financial markets are more fragmented, which makes things harder. Their data privacy rules, like GDPR, make it tougher to work with the huge data sets AI needs. And maybe there's a more conservative culture in European finance. European regulators are also being very careful and proactive about AI. They're coming out with new rules, like the EU AI Act, that will require more transparency and risk controls. And the European Central Bank is also pushing for responsible AI use. All this focus on ethics and regulation could slow things down a bit, but it might also build more trust in the long run. In terms of regions, London is a big hub for hedge fund AI, while continental Europe seems more focused on research and ESG. But the gap with North America is shrinking as more European firms invest in AI and see its potential.
So Europe is being more cautious and focusing on ethics, which makes sense. Now, what about Asia Pacific? You said AI adoption there was surging.
Yeah, Asia Pacific had a 58% adoption rate, but it varies a lot by country. China's the most interesting. It's like an AI arms race over there. Big funds like High Flyer have gone all in on AI. They even developed their own LLM called DeepSeek, which is known for its NLP capabilities.
Wow, a Chinese hedge fund with its own LLM. That's impressive.
Totally. This has created a frenzy in China. Other funds are afraid of falling behind, so they're investing a ton in AI research and hiring. The government is also very supportive of AI development. They have subsidies and national programs to boost AI. It's kind of interesting, though. Despite all this activity, China's overall AI usage rate was lower at 48% in 2023. It might be that the big players are way ahead, but the smaller firms are still catching up. Besides China, Singapore and Hong Kong are becoming major AI hubs. And Japan and Australia are using AI more in asset management. A key theme across Asia is using AI to jump ahead in areas where they lagged behind before, like AI-powered credit scoring and personalized financial advice. And overall, AI spending in Asia is set to explode, reaching around $110 billion per year by 2028, with finance being a big part of that. I think we'll see Asia closing the gap with the West and maybe even taking the lead in some AI applications.
Wow, so much energy in Asia, especially China. So to summarize, it seems like North America is focused on beating the market and high-speed trading. Europe is all about compliance and ESG, and Asia is pushing boundaries with AI-driven trading and fintech. But you also mentioned that there's more global collaboration happening too, right?
Exactly. Even though those regional focuses exist, it's not like they're totally separate. There's more and more sharing of ideas and research across borders, like
Wow.
through academic partnerships, conferences, and companies working together. And a lot of big financial firms operate globally, so they're using their AI strategies and tech in different regions. So even with those regional differences, the big trend is clear. AI in finance is a global thing, and it's growing fast. Different regions are learning from each other, which is leading to a more connected and tech-driven industry.
Okay, enough about the present. Let's talk about the future. Fast forward to 2030. What does the world of AI and hedge funds and asset management look like then?
Well, by 2030, I think AI won't just be common. It'll be everywhere in finance. It'll be way more sophisticated, which means more autonomous decision-making and real-time risk management powered by AI.
Let's start with that first point, autonomous decisions. Are we really heading towards a future where AI is managing entire funds with little to no human input?
Well, what Bridgewater's doing with their AIA lab is a good example of what might be coming. By 2030, I think it's very likely we'll see some large funds being run mainly by AI, especially for high-frequency trading and short-term strategies, where AI already has an edge. As deep reinforcement learning gets better, AI will be able to adapt to market changes in real time, basically learning and improving their strategies as they go.
So could we actually see AI-driven funds become a normal thing?
Oh, I think it's definitely possible, especially if these early attempts are successful and show consistent good performance. But most people in the industry still think that even by 2030, AI will be more like a co-pilot than a solo pilot for most investment strategies. Especially for strategies that are long-term or require nuanced thinking, humans will probably still be in charge. Ken Griffin from Citadel put it well, human judgment is still essential for navigating unpredictable events and making big strategic decisions about asset allocation. I think we'll see this kind of hybrid model evolve. AI will handle the data-heavy stuff, like picking individual stocks, timing trades, and executing them efficiently. And humans will focus on the big picture strategy, setting risk limits, and understanding those really unique market events. Of course, if those AI-run funds keep producing great returns, then investors might become more comfortable putting their money in them. But there will need to be transparency and good regulation in place.
It sounds like a gradual shift towards more AI autonomy, but with humans still playing a key role, especially when it comes to strategy and risk management. Now, how about AI's ability to understand human language? You said we can expect big things there too, right?
Oh, absolutely. The ability of AI to understand and use unstructured data, that's going to explode. The LLMs we see today will look super basic compared to the finance-specific LLMs of 2030. Imagine AI that can instantly absorb and understand huge amounts of financial info in multiple languages, like every earnings call, regulatory filing, news article, social media post, even expert commentary. It'll be like having a superpowered research team working 24/7.
So AI will become like an all-seeing, all-knowing research analyst.
Yes, exactly. These advanced NLP systems could highlight important info and potential opportunities directly to portfolio managers, or even feed into automated trading systems when they spot certain language cues or changes in sentiment. For example, an AI could be listening to a central bank governor's speech and pick up on a subtle change in how they talk about interest rates. That could trigger instant adjustments to trading models. We'll also see huge improvements in things like AI-powered chatbots that can give personalized financial advice. And imagine portfolio managers talking to AI assistants in plain English to get complex risk analysis or breakdowns of their performance. AI could even create these virtual analysts or virtual traders that you can have sophisticated conversations with. On top of all that, multimodal AI, which can analyze text, audio, images, and video all together, that's going to give an even richer context for decision-making. Think about AI analyzing satellite images of farms to gauge crop yields, tracking ships across the globe, extracting info from presentations during earnings calls, and even reading the emotions of CEOs in video interviews. All of that will contribute to making better investment decisions.
Wow, it's mind-blowing to think about how much AI will be able to process and understand. Now, ESG investing is becoming increasingly important. How will AI likely be involved in that by 2030?
Well, AI is going to be a crucial tool for ESG investing. ESG data is often subjective, it's inconsistent across different reporting frameworks, and a lot of it is self-reported, which makes it messy and hard to analyze. But AI is perfect for tackling those challenges. By 2030, I think it's likely that most investors will be using AI-powered ESG analytics platforms. These platforms will constantly gather and analyze tons of data, both public and alternative, to evaluate companies' ESG performance. They'll be able to find potential ESG controversies, and they'll even use NLP to assess how sincere companies are about their sustainability claims. AI can also help make ESG data more reliable by comparing information from different sources and flagging any inconsistencies. Imagine having real-time dashboards that alert portfolio managers about any ESG-related incidents involving their holdings. And ESG-focused funds will use AI to build portfolios that meet specific ESG criteria while maximizing returns. Even individual investors will benefit. AI will help create personalized ESG portfolios catered to each investor's values through robo-advisors that can understand and respond to their needs.
It sounds like AI will bring much-needed rigor, transparency, and personalization to ESG investing, and that's a good thing. Now, let's talk about predictive analytics. You said it will become even more powerful. What's driving that?
Several things will contribute to that. First, we'll have way more data than we do now. I mean, a ton of it. This includes alternative data from things like IoT sensors, Web 3.0, and blockchain. And AI will be essential for making sense of all that data. We'll also see big advances in AI algorithms themselves. They'll become more efficient, able to learn from less data, and better at handling complex and changing data. And they'll be more explainable, which means we'll be able to understand how they're making decisions. New techniques like causal AI, which tries to understand cause and effect, will make predictions more reliable. And quantum computing, if it becomes a reality, could supercharge certain types of AI calculations, making predictions even more powerful. Predictive AI will also be used in new areas beyond just market forecasting. Central banks will use it for more accurate economic nowcasting, and it'll help predict things like market liquidity with more precision. Basically, predictive analytics will be baked into every part of the investment process, from evaluating new strategies before they launch to continuously stress testing portfolios under different scenarios.
So AI will be predicting everything.
Pretty much. And these predictions will likely be more accurate and more widely used than they are now.
But does that mean the market will become hyper-efficient with everyone having access to the same predictions?
It's a good question. If lots of investors have access to these powerful AI tools, then yes, the market could become more efficient. It'll be harder to find those hidden opportunities that generate alpha, those excess returns. This will probably intensify the competition for the best data and the best algorithms. If you want to survive and succeed in finance, you'll have to constantly innovate in AI.
That makes sense. AI will be the key to staying ahead.
Mhm.
Now, lastly, let's talk about the regulatory and ethical side of all this. What kind of changes do you see happening in the rules and oversight of AI by 2030?
We're definitely going to see stricter rules about how AI is used in finance. Regulators are starting to realize that AI could pose some big risks to the whole financial system, so they're going to want to protect investors. The head of the SEC, Gary Gensler, has even warned about an AI-triggered financial crisis if we don't have the right safeguards in place. By 2030, we'll probably have new rules that focus on transparency. So funds might have to disclose how they're using AI and how they make sure their models are valid. There will be more emphasis on accountability and testing too, like mandatory audits and stress tests for AI models. And more autonomous systems will probably need to have those kill switches we talked about earlier. Regulators will also be concerned about conflicts of interest and biases creeping into AI algorithms. They might start monitoring AI-driven trading for any signs of market manipulation. And since financial markets are global, there will probably be a push for international coordination on AI regulation, maybe through organizations like IOSCO. The EU's AI Act, which considers a lot of financial AI systems as high risk, could be a model for other countries.
This could lead to stricter oversight and even licenses for using AI in finance. We might also see this interesting overlap between AI risk and ESG investing. Investors might start evaluating funds not just on their traditional governance, but also on their AI governance. So things like ethical AI development and deployment could become really important. Maybe we'll even see ethical AI reports becoming a standard thing.
It sounds like a whole new set of rules and standards are coming for AI in finance.
Yeah, I think so. And the challenge for regulators will be to keep up with how fast AI is evolving.
Yeah.
They need to create rules that encourage innovation, but also prevent problems. It's a tough balance.
Well, this has been a truly fascinating deep dive into the world of AI in finance. It's super clear that AI isn't just a tool anymore. It's becoming a core part of how investments are managed. We're going to see more autonomous trading, deeper analysis of unstructured data, more sophisticated ESG integration, and even more powerful predictive analytics. And this transformation is happening globally, with each region bringing its own strengths and approaches.
I agree. And as AI becomes even more essential to finance, we'll need to focus on the risks and ethical implications. AI governance, making sure AI systems are reliable, and promoting responsible innovation. All of that will be crucial. The industry will need to adapt, but there are a lot of exciting opportunities along with the challenges.
So, as we wrap up, here's something for you, the listener, to think about. With all these changes coming, what new questions should you be asking about how your investments are being managed? What does due diligence even mean in a world where AI is making more and more decisions? It really makes you think about the balance between human judgment and machine intelligence. That balance is going to define the future of finance.